right. Good morning, everybody. Excuse me. Good morning. Welcome to the room. Nice to see you guys. Hope everybody's doing great today. Morning, Rob. Rain, nice to see you in here. Been a while. Miss Adriana showed up too. I like it. Mike's back. Got all the cool kids. Sergio showed up. Good to see you guys here today. Um, for those of you that weren't with me yesterday, guys, I'm just going to warn you, you're guinea pigs. We are trying to revamp and simplify and streamline and make education to the point to where you could really just pick up a book, look at it real quick, and understand what it is we're talking about. So I've created a slideshow for the first hour today, a little presentation. I got some good feedback from yesterday. So I want you guys to let me know if it feels like I missed something, if it feels like you wish you had more, or maybe even if it feels like you wish that there was a little less on a certain topic. I want you to let me know. Send me a little message, let me know, because what I'm trying to do is make this easier for the people that follow you, make it easier for the people that are here now. And of course, everything that we do starts with a check of the news, right? Each and every morning, forexfactory.com. Today is Wednesday, the 21st, and there's not a lot going on until 2 o'clock. And at 2 o'clock, we have those FOMC meeting minutes. And man, those are without a doubt market movers. They always have been. They may not be today, but I see that big red box next to it, which tells me that I'm going to choose to not trade into that news. I'm going to choose to not take any trades before the FOMC meeting minutes. And that's up to you. You will make that choice. All you have to do is get burned by news one time, and you're like, whoa, no, thank you, don't need it. But every morning I look for red, I look for orange, and I just say to myself, I'm willing to sit on the sidelines for a minute. It's a great time to go toast a bagel or have a cup of coffee or just, go walk on the beach if that's your thing. Um, Whoops, that's not what I wanted to look at. That was for you, Cav. Everything that I talk about, guys, will be found right from the education page. There really aren't any secrets with what we do. All the information, hey JW, all of the rules, all of the looks, all of the everything, whether it is a high probability trend trade, which we're going to speak in great deal about this morning, whether it is an HVA trade, whether or not it is a momentum trade, all of it is available for you here. And I'm going to tell you guys right now, rules are the biggest thing. Good morning, Luciano. Rules are what we do. But what you're going to be able to pull off, and I'm going to start my little slideshow here, and we're going to get going. No, there is no SmackDown. So, Cav, there's one thing that I want you to understand as you learn market flow. And guys, this is so important. Cav, you're learning something new, right? I know you are. So, you're learning something new. Don't feel like you have to risk real money to learn a new something, guys. One of the biggest things that we talk about is the path to being a trader, and simulation is a big part of that. So, as you begin to learn something new, I can tell you from experience, simulator's your best place, guys. That's your big safety net. Because you will make mistakes, you will misunderstand concepts, you will take trades that you shouldn't take, and you'll even mismanage trades that maybe you should have been in when you're learning a new concept. And it's no different for the brand new user. The brand new user, you're just doing it on the first trade, the easiest trade, the best trade. And three of the things that we're going to work together that you're going to master. The first thing is chart reading, because chart reading is 90% of your day. Chart reading is what we do, guys. We read our indicators and then we take a trade if our indicators tell us to take a trade. We don't have to anticipate, right? We don't need a crystal ball or a magic 8 ball. We wait for the indicators to tell us that it's time to take a trade, and there's a level of patience that comes with that. But when you are comfortable reading your indicators, you're going to understand three very key concepts. You're going to understand where the market is likely to go, where it's likely to continue, and where it's likely to stop. And we're going to use those continuation points for entries for the highest probability trend trade. We are going to use, no, I love the 8 ball. I would never mock the 8 ball. We're going to use the likely to go spots, guys, for profit targets, using momentum and Fibonacci to understand where it's appropriate to get out of the market. And then we're going to use these likely to stop areas. And they're two very, very big parts about what we do. Likely to stop is where the market trend can end. It's likely to stop is where the market can reverse. Likely to stop is where you shouldn't take that next trade into the area. So likely to stop becomes this huge safeguard for people that are trading with Nexgen because you see these areas ahead of time and you're going to have this amazing recipe to know when it isn't appropriate to trade into them. But likely to stop, these termination conditions, as we call them, they become the anchor for the highest probability trend trade you can take, guys. And when one of these key areas reverses the market, we're going to look for our advantages trading away from that area. So um, trade entry precision when you're a chart reader is a big part of what we do. Getting into the market at the best of the best spot, being able to reduce risk, being able to manage profits, and that's where trade management comes in. And we're going to cover all these things today. We're going to go through and we're going to talk about them. Um, but I've got to share this one first, guys. There's a path to getting to where you want to be. And the first thing is posting your trades in class. It's taking a minute. Every time you see something that you're unsure of, post it in class. Every time you take a trade, win, lose, or draw, post it in class. Every time you post in class with a question or a comment, what it does is it opens the door for a private session. Even though we're in a group setting, I'm going to focus on your chart. I'm going to talk about what I see on your chart. I'm going to talk about what you did, where you did it, why you did it. But here's the key is don't make me guess. Tell me why you did what you did. And this is the most important part. And Cav, I was getting you a little bit on this one. You told me where you did it, right? I used this bar to get in. Well, tell me why, right? What were the advantages that you saw? What made you say, yes, a long trade is great here? And if the answer is just, well, I saw this bar, then that's cool. Then we'll talk about the chart read and we'll go back and redo it. But the more information you give me on the whys, why did your large chart say that you should be going this direction? Why did your small chart give you the entry there? And why did you get out where you got out? And if you throw all these things at me, guys, what happens is I give you the best possible feedback. The second thing is using your spreadsheet. NextGen's provided you a spreadsheet. It's in your NextGen Study Picks folder, and it looks just like this. There are 3 pages. The first page is trade tracking. The first page is your trade journal, and every time you take a trade, it should go into this first trade or first page. It gives you drop-down menus for how you felt, what you saw, what you were thinking, what you were feeling. It gives you a section for notes to put the feedback that you get in the classroom from it. And this is just where you're going to begin to recognize patterns. Go back and study this every morning. You'll see the patterns that are bringing you success, and you'll see the patterns that are taking that success from you. The second page is your favorite look section. This is where every time your rules are met, every time you take a trade that you're like, man, this is the best trade ever, I want to work this into my plan, that's what this setup look is for. Make sure that you're filling that up. If you post a chart in the room and I'm like, wow, you had momentum and a clear path, and look at this entry, this is amazing, get that one into your personal trade setup look, because that's the trade that you never want to miss. And then we've got about 300 pictures of you guys being brilliant with the software. Users from all over the world on different markets, different time frames, but using the exact same concepts to find success. This third tab gives you the entry sequence, precision, getting in at the best of the best spot. It gives you a very pragmatic approach to management, and then it also gives you some ideas to growing your management plan. Everything we do is patterns, guys. Patterns repeat themselves over and over. Patterns are why we are comfortable. Patterns are why we are confident. And there's a whole section on those, a whole section on those likely to stop areas. And the goal for each and every one of you new users shouldn't be to be a trader, but rather be a chart reader. And you're going to become a chart reader when your section, the favorite look section, looks like my section, the client trade. So the more pictures you take, the quicker you're going to get to where you want to be. So don't omit those very important parts, guys. Post your trades in the room. Tell me why you did what you did. Take that feedback, drop it into the spreadsheet, and study it every day. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to do that with a high probability trend trade first, guys. And because a high probability trend trade is a trade that only has 3 rules. Here we go. And each of these rules provide an advantage, the advantage of momentum, is your first rule coming into place. The advantage of no of room to the targets, no terminations, that gives us a clear path, comes from your second one. And then the advantage of the entry area, getting in precision where the market is most likely to continue. Guys, it's these three advantages that create a trade. And it's not the other way around. It's not, I'm going to take a trade and then hope there are advantages, guys. You're going to learn to commit to three rules. You're going to learn to commit to three advantages. And you're going to find yourself in this position where you simply say, man, if my advantages aren't there, I don't want the trade. And these three advantages come to be on only two charts, guys. We use a two chart method. There are more charts as you get good at these trades, but for the first hour, we're going to talk about two charts. We're going to talk about the advantages on two charts. We're going to talk about the direction of the market. That's going to come from the large chart. We're going to talk about the momentum of the market. Rule number one, those strong triggers, that comes from the large chart. And then we're also going to talk about the areas that can be problematic, those areas that may be behaving as a termination condition, as a likely to stop area. And again, that's rule number two, and this happens on the large chart. 66% of your advantages come from the large chart. And then when you have those advantages, we're going to refine the broad stroke of the brush that this slow moving chart is, and we're going to pinpoint where the market is likely to continue. We are going to be able to locate precisely where the bounce point to continue with the trend is, and you're going to be able to enter the market there with rule number three, giving you the lowest possible risk and the highest possible profit potential. So we are going to learn the rules for that high probability trend trade. That trade that typically wins 70 to 80% of the time when you follow the rules. That trade that creates confidence through the memory of success. Um, you guys should be simulating. As you learn these trades, you should be simulating, practicing, being very willing to mess them up, to break rules, to have mistakes, to lose trades. Guys, it's all part of the learning process. But then once again, post those pictures in the room. Tell me why you did what you did. Um, and we want you focused on trading with advantages. We want you focused on trading with the best of the best so that you can find that success, so you can build that confidence, so you can take your chart reading and turn it into a career as a trader. We don't want you practicing the wrong trades because the wrong trades simply are that short-term success that's usually followed by long-term failure because it's not repeatable, because there isn't an advantage. We're going to simplify heavily, guys. We're going to talk about the high probability trend trade first. I always encourage you guys, learn what's easy first before you try to add that next level. You need to know what looks you're going to commit to. That's that second page, right? Taking a lot of pictures. And when you see a trade, when nothing is moving, it makes it easy to take a trade when the market is live. So the more of these that you study, coming through, letting these guys that did a little work make your job easier, the easier it will be to recognize the trade so that it becomes easy. The more you annotate charts, the more you post in the room, guys, the quicker you're going to get to where you want to be. I promise you this. This has been the path forever. So we're going to talk about the high probability trend trade, guys. I want you speaking to yourself in terms of advantages every time you look at your chart. I want you to be able to open a chart and say, do I have the advantage of momentum? Do I have the advantage of a clear path? And do I have the advantage of an entry area? And if you do, congratulations. It's time to get in that trade, no matter what your gut's telling you. We're going to keep it simple on two charts, and we're going to let the large chart lead the way. So, guys, the first rule says that we must have strong triggers on the large chart. Rule number one is designed to give us the advantage of momentum through strong triggers. I really can't have strong triggers if I'm not trading with the direction, because direction is defined on the large chart. So if the background is green, everything is going up. And if the background is red, it's going down. And as a brand new user, your best chance of success is to be trading with that background color, to be looking for long trades when it's green and short trades when it's red, because that's what it takes to have strong triggers. Strong triggers are a pretty simple recipe, guys. It is just embracing what we call a momentum phase with the trigger bars. Your large triggers are these dash triggers, and when the bars are outside of them, that's the best time to sell Fibonacci resistance on that smaller, faster chart, or buy Fibonacci support on that larger chart. And you'll notice through the bars, this is a momentum phase, and then it's a weakening phase as they come back inside, and then it becomes a momentum phase into a weakening phase. And that's kind of the technical beyond it. But when we're looking at this strength, we use a combination, small trigger, large trigger. The small trigger is a faster moving trigger. The large trigger is a slower moving trigger. The small triggers and the large triggers work together to give us the best of the best. And when the triggers are strong, smalls are above the large, separation between the two, we can clearly see that the market is in that momentum phase because the bars are outside of the large. Guys, this is the best of the best look for buying a pullback on Fibonacci support on that smaller, faster chart. Or when the smalls are below the large, when the large are wide, they're angled in the direction of the trend, guys. It's the space between the triggers, and I want you to equate it with scissors that are open, ready to cut. This is when you're going to sell a pullback on that smaller, faster chart. On the large chart, they look like these tails. It's a one-bar event. We're literally going to dissect that bar into 15 to 20 bars, and you're going to be able to pinpoint where the very top of this tail in a downtrend is likely to happen, or where the very bottom of this tail in an uptrend with all that strength is likely to form. And this becomes the area where the market is most likely to continue because strong triggers are pushing the market in the direction of the trend. Guys, this look is pretty universal. It happens all day, but it doesn't happen strong all day. There's going to be little gaps in between, and there's a life cycle of the triggers, guys. And this is probably my favorite picture that I've ever used in education. Strong triggers, smalls outside of the large are wide, they're angled in the direction of the trend. The bars are outside of the large in what we call the momentum phase. Guys, this is rule number one defined. The only way that I can have these strong triggers is if the small, the large, and the background all match color. If the small, the large, and the background all match. And if they don't, I don't have the best look for a high probability trend trade. So I'm going to see these strong triggers. The scissors are open. There's my pullback. We're going to identify this on a smaller, faster chart, and you're going to be able to continue down with the market. With both triggers down, when one of the small triggers works its way inside of the large triggers, this is the first sign that momentum is slowing, guys. And short trades can still be taken, but we need to make sure that the other charts agree. We need to make sure that that smaller, faster chart agrees. And then when the small triggers work inside of the large triggers, this is what we call a weakening or a slowing of the trend, and anything can happen up or down when you have these weakened large triggers. Short trades can still be taken, but they must be managed well. You need to make sure that you're not giving up the other two advantages. And then, guys, these weak triggers, when they hit Fibonacci support, support is more likely to hold, to cause a reversal when the market reaches areas with weak triggers. So that's your life cycle of momentum, from strength to slowing to weakness to the reversal right at the key area. Is everybody comfortable with the look? Everybody's comfortable with the idea? And let me see if I can just pull up a large chart real quick. We'll look at it live in the NASDAQ, guys. This is such a key concept. When there is strength to the downside, we're going to look to sell a pullback to Fibonacci resistance. When there is strength to the upside, we're going to look to buy at Fibonacci support. And you're going to see it over and over, and you're going to see these tails. And you can go back and you can use these tails to study. And then as we push down, guys, you're going to start to notice when those large triggers are flat and indecisive, and it also happens to be right at a key area. And eventually, you're going to look for that momentum. You're going to look for those tails. But you're going to see this indecision where the colors don't match, and you're going to see it typically at key Fibonacci areas. And for all of you guys that are chomping at the bit to make something happen, that's really the time to sit on your hands and do nothing, because you've lost that advantage of momentum. So I'm a big fan. There's your look. There's your indication. When triggers are flat and lifeless, guys, when the colors don't match, there's simply nothing to do. So once we have, let Let me get back to my slideshow picture. Once we have momentum, once we have those strong triggers on the large chart, remember large chart defines direction, large chart defines momentum, we're going to make sure that termination conditions are false, that room to profit targets are true. And it's really those sayings are kind of synonymous, right? If I don't have anything in the way, termination conditions are false, well, then that lets me know that I've got some room to make money. So we're going to go through and we're going to use a simple little recipe to make this happen, to understand when we've reached an area that may stop the market. And if price, these dynamic Renko bars, come down and hit Fibonacci support, and you know what? Here's a picture that needs to go into this one. Thanks, guys. Dun, dun, dun. Termination conditions defined, guys. Let's do that first. So I'm going to make a note to add this into. There we go. We're going to look at blue Fibonacci support on the large chart, red Fibonacci resistance, once again on the large chart. We are going to look at divergence, lows, and highs, magenta and cyan lines that print when there's a loss of momentum. We're even going to look at three divergences in the same area. That can be a trend killer, and we're going to see that on both small and large, and I'm going to look at both. So we're going to use these ideas, these Fibonacci-based indicators that may reverse the market, and it's going to be based on a comparison of the Fibonacci area and the T3 trigger strength and location. And that's kind of a key concept. We're going to look at both strength and location because strong triggers can break areas. Strong triggers can smash through areas and take you to the next Fibonacci level. But if your dynamic Renko bars, if the price bars come down and reach an area, so after price reaches any Fibonacci support, you're going to check the trigger lines. And if they're not below the support, do not take any more trend trade shorts on the small chart. And it really is that simple. If price reaches an area, support, and the triggers remain above, the path isn't clear. You've reached a termination condition. There's no reason to waste your money into the area because these areas are where decisions are made, where the people that control the market are buying and selling and taking profits. And like we saw in the NASDAQ just a moment ago, it's also where they fight. And they'll dissect these areas and create this untradeable fight. And you guys know it because rule number 2 is in effect. Look at the bounce. When your triggers are weak into the area, it really adds some fuel to the fire that this is an area that may stop the market, that it may create a bounce. So price reaches, triggers don't break, guys, no trades. If your small triggers and your large triggers get to the other side of an area, in this case, once again, it's support, right? Price reaches support, but with all that strength that has the potential to break, when both the small and the large get through support, well, support begins to behave as resistance. Once again, we've got odds favorable in that momentum phase. There's the top of the tail right at the resistance that used to be support. Guys, you're going to pinpoint this entry and be able to ride momentum down to the next fib. And that's kind of what we're working up to right now. So price reaches, no triggers, no trade. There is no clear path. The termination conditions are true. No room to the target. If the small and the large break through the area and the bottom of this bar doesn't reach the next area, well, now the path is clear. Let's look for an opportunity to take that trade. The same is true at resistance. Price reaches resistance with a little bit of strength and it does push down. We knew not to go long because triggers remain below. It reaches support. All the triggers are above. We're not going short. 90% of your day is spent reading indicators. 10% of your day is trading when the advantages are present. Price comes back to Fibonacci resistance. I want you to take note of the weakness in the triggers. It also reaches a divergence high line, and it also reaches a second divergence, and not one of my triggers can break through, and there's weak triggers. So this is the one that's more likely to hold. And when it holds, I want you to see the reversal. Large triggers go from green to red. Small triggers are below the large triggers. We're in the momentum phase, and the bottom of this bar has not reached Fibonacci support. The path is clear, and there's that tail, guys. That's where you're going to pinpoint, identify, and enter that short position, looking to use that momentum to take you down to the next key areas. So Is everybody comfortable with the recipe? It really is pretty simple. If price reaches the area and the triggers remain above support, or if price reaches the area and triggers remain below resistance, let's sit on our hands and do nothing. If both the small and the large get beyond the area in question, the area is broken, and you'll see very often that resistance will behave as support or support will behave as resistance. And that's really it for the new user. So price comes down and reaches these yellow 1-to-1s even with a little bit of momentum, but the triggers remain above, and you guys just say to yourself, hey, let's sit on our hands and do nothing. Let's not take this trade. Thank goodness you didn't, because look at the bounce. Straight off of these 1-to-1s, the market pushes all the way up into resistance and the triggers remain below. Thanks, Josie. And then they fight to the downside, and they fight to the upside, and they fight to the downside, and they fight to the upside. And guys, this is your 90%. This is that sitting on your hands and doing nothing when your rules aren't met. And ultimately, small and large get above resistance. We know that the path is clear. The smalls are outside of the large. We know that we have momentum, and there's one of those tails. This is where my users jump in on that high probability trend trade. They take that pullback right to support inside of those trigger lines, and off they go to the next area. And this is the trade that typically wins 70 to 80% of the time, guys. This is the trade that creates confidence through the memory of success, and this is the trade that's really just the accumulation of three advantages. So termination conditions on the large chart are going to use lines, guys. Lines are what get us reading those trigger lines locations, reading that trigger line strength, waiting for it to break the area. Sometimes on your large chart, you'll see the market kind of turn from nowhere. Everything is down, the path is clear, but you will notice that those triggers are weak. And sure enough, it goes up. And even sometimes, with odds favorable momentum and a clear path, that market appears to go down. So you're going to see this look at a low and this look at a high. And I'm going to talk about our next termination condition, guys. And it's three divergences in the same price range. Three divergences may stop a trend. What is divergence? Divergence is a loss of momentum, guys. If the market's pushing down and you see a pivot, meaning the market went from down to up, a negative number prints, and it doesn't matter what the number is, it's a byproduct of the calculation behind the scenes. But you'll also see that cyan line print to the right. And guys, if you get three of these cyan lines, three of these negative numbers in the same price range, it might terminate the trend. No matter how clear the path is, no matter how strong the triggers are, this is a termination, but it's a termination that you're going to see on the small chart first, that faster chart first. Three at a high may terminate the trend. And this look becomes more powerful, guys, when the small triggers are inside of the large triggers. Momentum is universal. This is odds favorable momentum. This is strong triggers on a small chart. This is also weak triggers. Anything can happen triggers on a small chart. So when you put three divergences with weak triggers, guys, you're losing the fight to the downside. And then when that third divergence pivot is higher than the previous, man, party over. Third from is lower than the previous, that's a tough one. And you're also going to use this higher divergence look, this lower divergence look, as a management tool as you begin to get into trades and get a little more comfortable with management. But if you sell that perfect pullback and three divergences print, guys, this is going to help you save equity. This is going to keep you safe. So you'll see this look at a low or that look at a high when this slower chart can't give you that information fast enough. It'll keep you from taking that last short. It'll keep you from taking that last long. Three divergences right down here will also set you up to be comfortable taking that pullback with odds favorable momentum as this market has the potential to break that fib and get you up to the next transition. So guys, termination conditions are huge. Termination conditions are going to allow you to have a clear path. Termination conditions are lines on the large chart. Termination conditions can stop a trend. Termination conditions can reverse a market. Termination conditions can create a fight that you don't want to be a part of. So far, the large chart has defined the direction, right? The large chart has said, hey, we're going up. The large chart has said, hey, we have momentum through strong triggers. The large chart it says hey a lot. Termination conditions are false. You have room to your target. So we are going to employ rule number 3 on the smaller, faster chart. And guys, this is where the magic happens. This is where trades become manageable. This is where precision comes into play. So much so that we are going to enter with a limit order, meaning you're literally going to wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback in an area at those triggers, at favorable large triggers, guys. And rule number 3 reduces risk. Rule number 3 increases profit potential. And rule number 3 is really pretty simple, guys. When the large chart says momentum, 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 when the path is clear, we're going to use the small chart to buy a pullback. So much so with the accuracy, we're going to wait for it. We are going to buy low. And then we're going to have that predetermined exit, typically at Fibonacci when the momentum is right. But profits created by knowing these two levels, by understanding where we're going to buy low, that's where the market is likely to continue, and understanding where we're going to get out of that trade. We're going to sell high and get the absolute most out of a trade. And the same is true going the other direction. When the momentum is overwhelming to the downside, when the path is clear to the downside, we are going to sell high. We're going to let the market come back to us, find an entry, and hopefully ride that wave of momentum down to our predetermined target. And getting the most out of the market requires selling high and trusting that market to get to the next level. Rule number 3 lets us refine by taking the information inside of this bar. Thank you, Ron. Taking this one bar with momentum, this one bar with a clear path, and what you'll see is on your smaller, faster chart, there's going to be a lot of up bars in this bar that is continually down. There's a lot of up bars to get us to the top of that tail. So the bottom of this bar is the beginning of a pullback, the pullback to the area. The top of the bar typically is a collision with an area inside of triggers. Here it looks like an entire movement. Here we pinpoint it as the top of the bar. So when we're looking for our entry, the large chart says up, the large chart says a clear path. This reversal bar on the smaller, faster chart, guys, this begins the pullback. This begins that little retracement counter to the underlying trend. I'm going to look for my triggers, guys. My large triggers, notice that I have strength, momentum. I'm in a momentum phase. And my synthetic triggers, the step triggers. And the key to success, guys, the key to the least amount of risk and the highest amount of profit is looking for the areas inside of these triggers. So the tighter the triggers are on top of one another, the fewer lines can fit within, which means that I'm looking from the top of the triggers to the bottom of the triggers, and then I'm looking for the areas within. I'm looking for a place to give the market a bounce. Fibs, mid-bands, yellow 1-to-1s. So rule number 3 says that I'm going to use a limit order to buy a pullback. Here's my pullback at an area. My area is going to be a mid-band, a Fibonacci support, or yellow 1-to-1, and they have to be inside of what we call favorable large triggers when they're trending one on top of the other. My limit order goes at the top of the window because the large chart is screaming to the upside, because the large chart has nothing in the way. Guys, this becomes your window of opportunity from the highest point of support to the lowest point of support inside of favorable large triggers. This fib is beyond the triggers. It's not a part of the window. Is everybody good with this? What we're doing is we are pinpointing where low is to buy low. We're pinpointing where the market is most likely to continue. And guys, great entries create manageable trades. When the market's going down, when the momentum is strong and the path is clear, we're going to wait for the reversal bar. At the time of the reversal bar, we will identify the bottom of the triggers to the top of the triggers, and then look for the lines within. In this case, there's only one line. We're looking for fibs, mid-bands, and yellow 1-to-1s. I have one line inside of my favorable large triggers. I have one point where the market is most likely to continue. And guys, this is where I'm going to place my limit order, just below that line. And if the market comes back to me, I'm going to sell it on its way up. and I have the best of the best entry, guys. In these areas beyond the triggers, I don't worry about them. That's not my window of opportunity. That's not where the market is most likely to continue. Guys, this is the trade that typically wins 70 to 80% of the time. This is the trade that creates confidence through the memory of success. And when the large chart says momentum and the large chart says the path is clear, I want you to notice how close it is to this problem, to this divergence high line. Because you guys are going to buy a pullback at areas inside of favorable large triggers, you're turning 5 ticks worth of room into 25 ticks worth of room. You're turning $50 worth of profit potential into $250 of profit potential because we buy the pullback to an area inside of favorable large triggers. We don't get in at the top of the bar. We get in at the bottom of the bar. We get in at support inside of favorable large triggers, guys. And that's one of the great things that creates a manageable trade. It reduces your risk. It maximizes your profit potential. We're not getting in at the top of the bar. We're using momentum and a pullback to support inside of favorable large triggers to give us the absolute most room to get to that next key area. And you'll see how the market goes to the next key Fibonacci area. When it gets there, the triggers are weak. They don't break the area. You guys knew this is your best exit. Is everybody with me on entries, guys? Entries are really your first 20 days. Entries are where you're going to get the best of the best. Entries are where you're going to have the least amount of risk because if you know where the market is likely to continue, if you know where the market should bounce, well, then you also know where the market shouldn't go. So if I take this short trade at the areas inside of favorable large triggers, guys, I can put a protective stop 4 or 5 ticks above that area of resistance inside of triggers. And what this does for me is it says, with the advantage of momentum, with a clear path, with everything in favor of this trade, if it extends beyond my window of opportunity, if it extends beyond the point where the market is most likely to continue, I'm going to exit that trade. I'm going to take a loss. And it's okay to take a loss, guys. Losses are a normal part of a positive equity curve. And if this is a trade that typically wins 70 to 80% of the time, well, then this is a trade that 20 to 30% of the time is obligated to lose. And I want you to get comfortable with the idea that you're probably not going to be a 100% winner every day of your life. And that's okay because by reducing risk, buying a pullback, by knowing where the market shouldn't go, and then by understanding where the market is likely to go with all that momentum, guys, wins can be so much bigger than losses. And the cool thing is your initial stop is where the market shouldn't go. If the market gives you a reversal bar in the direction of the trade, you can reduce risk even further, 2 ticks below that reversal bar in a long trade, or 2 ticks above a reversal bar in a short trade, and it reduces risk even further. And that's where management really comes in, guys. Once you're in the trade and your stops in place, that's when you're beyond that look for getting in, and that's when you turn your attention to being able to manage a trade. That's where you take that great entry and you turn it into a pretty awesome management opportunity. So we'll go back to management. I'm going to shut down my little screen show here, and we're going to look at the NASDAQ, and let's just do some live chart reads, guys. The background is green, so we know that the market is likely to go up, and the NASDAQ moves so fast. The smalls are outside of the large. We're in the momentum phase. The momentum is there. But price reached a divergence high, and the trigger lines didn't break. And guys, look at the reaction right beyond the area inside of favorable large triggers. How come? Because rule number 2 wasn't met. And rule number 2 is designed to keep us from trading into areas that may reverse the market. Whoops, that is my untitled workspace. Let me pull up NinjaTrader and get rid of that one so we can just go in between. Here's your momentum phase on crude oil. Everything says up. The market was its absolute strongest. Potential entry, not a perfect entry. And now we're into these fibs, guys, that we don't have a clear path. Notice that the large triggers and the synthetic triggers We're not overlapping. And the market kind of fizzled out right in the middle, guys. And this is one of those looks where it's okay to say rule number 3 isn't made. Yeah. Crude oil and Nasdaq, Ron, they trade a little differently. Nasdaq and S&P go quarterly. Um, and I don't think we've had our roll date yet on Nasdaq. Crude oil will change every month. Like we should see crude oil change pretty soon. And then guys, there is the S&P right to support to the tick, and that creates this bounce. So we're going to go through and we're just going to learn how to piece it together, right? Price reaches a divergence high, no more long trades. It saves you from going long. Price reaches support, we're not going to go short, but notice how they can't seem to get through that divergence high. Guys, this is a go make a sandwich pattern. When the rules aren't met, it's okay to say don't take a trade. For you guys that are newer, for you guys that think you have to be busy every minute of every day, the large chart, let's do it this way. The large chart doesn't give me rules met. The large chart doesn't give me a clear path. The large chart isn't providing me momentum. The large chart says that 66% of my advantages are gone. This is where the new user will say, well, I really want to be in a trade. There's a mid band inside of a red trigger, or there's a mid band inside of a green trigger. I'm going to try to bypass the advantage of momentum. I'm going to try to bypass the advantage of a clear path and hope that this insignificant refinement entry chart can give me the right trade. And then it gets even worse when you add this market flow chart, because you'll say to yourself, look, there was an up bar. I need to be in that trade. So guys, your Renko bar chart leads the way. It gives you the advantage of momentum. It gives you the advantage of a clear path. Your smaller, faster chart is nothing more than an entry chart. And then guys, if you've added that third chart, if you've added that dynamic Renko chart, this is a confirmation chart of having your rules met on the large chart. And Cav, that was for you, brother. And it's hard sometimes. But now we've got momentum to the downside. Now the small triggers have blasted through the problem areas. Now the large triggers are following. And this is where I start to look and think, man, the termination held twice. It reversed the market. The strength is strong, because strength is strong. And this is where I use a little confirmation. Absolutely. I have odds favorable momentum across the board. Once this is done calculating, it'll catch up. And that's when I start looking for a trade. That's when I start looking to take advantage of everything that this market is telling me. And now we're caught up. Now I have odds favorable. And it pulls back to resistance inside of favorable large triggers. And maybe there's my opportunity for continuation down. But notice that the small chart fluctuates. Notice that the small chart creates problems. And this area hasn't broken yet. Our best of the best would have been somewhere in here. Now we've got to let the area break again. We're still waiting to see what this area does. Support has held, but I don't have momentum to the upside yet, so I'm not looking long. My background is red, but I can't look short because my triggers are green. Guys, are you seeing how 90% of your day is spent reading indicators? 90% of your day is simply just waiting for the best of the best. And when those three rules come together, guys, it is freaking magical. It's a trade that typically wins 70 to 80% of the time. It's a trade that creates that confidence. You can go back and study this using these bad boys. Guys, go to the large chart. If you see momentum, circle a tail. Don't even worry about the clear path. If you see momentum, circle the tail, because I want you believing in momentum. I want you to believe that momentum sets the tone. If you circle that tail and it pulls back to an area inside of favorable large triggers on the smaller, faster chart, well then guys, you have a trade. And you can do this historically, so you're not entering the trade, right? Because it's a historical look. But this is what I want you doing, new user. I want you scrolling back, and I want you looking for these tails with momentum. And if they come to an area inside of favorable large triggers, I want you to smash that capture button. And I want you to click and drag from the top left to the bottom right on your large chart to the small chart. And then Capture is going to give you this little camera. And it's going to ask you, hey, Mark, what do you want to do with this? Well, I want to capture an image. And I'm going to capture it. And it's going to give me the exact same picture that I took. Guys, here's where our conversation starts. Here's where that first step in becoming a confident trader, ASAFP, comes into play. I want you to use the shapes and the highlights and the callouts and the arrows. And the most important thing that you can do is left click and drag and create a little dialog box here. And I want you to write on every chart where you take this picture. Rule 1 says strong triggers. Yes. What do I have because of it? I have momentum. Rule 2 says no terminations. Yes. What do I have because of it? I have a clear path, right? And I'm reminding myself, this is what rule number 1 looks like. This is the best of the best. There's where I'm looking to make sure that I haven't reached the next area. This is the best of the best. And because I have momentum, because I have a clear path, rule 3 says buy support inside of triggers, right? Not buy the triggers, not jump in at the top, but buy support inside of the triggers. And guys, this becomes your high probability trend trade. This becomes your best of the best. And when the market's not moving, isn't it easy to see without the fear of loss, without the fear of missing the entry, without the fear of taking the wrong trade? If you scroll back and put a square on this tail and that square lines up with support inside of favorable large triggers, guys, you're creating trust in the rules. And because you waited for the pullback, guys, your risk is as small as it can be. Your initial risk is here where the market shouldn't go, and once you get a reversal bar, it goes right below it, which means you're able to catch this trade and follow that trade and really make the most out of that momentum, taking you up to the next problem area. So take this trade, and I want you to hit copy. Bring it over to the chat room and drop it in. And this is where the second hour comes in, guys. I'm going to go through all the pictures that you guys have posted. And I'm going to come back and I'm going to look at it. And I'm going to talk to you and the entire class in terms of advantages. I'm going to talk about momentum. I'm going to talk about a clear path. And I'm going to talk about your entry area. And I'm going to do this, and I'm going to relay what I see to what you told me that you saw. And if you don't tell me what you saw, then guys, I have to make it up, right? I can read charts. I'm pretty good at this. This is why I'm teaching the class. We're teaching you to read the class, to read the charts. We're teaching you to recognize advantages. And guys, tell me why. Speak in terms of advantages. Don't tell me that I think it was going to go up unless that's all you had to work with. I have no idea why I went long, Mark, but I felt like I should. And then we'll talk about those 3 advantages and see if it was a good decision. You guys that are a little more seasoned working on plans, it's imperative that you talk about what you see and why you did what you did, because that's what creates the plan, is being able to do that, being able to repeat it, being able to understand when the advantage is there, and then more importantly, understanding when those advantages are gone. Because if one of these advantages is gone, it's no longer a high probability scenario. It becomes a medium probability scenario. And if it's a medium probability scenario, you've got to be a chart reader. You've got to make sure that you're not sacrificing momentum or an entry area or a clear path. And I never give up more than 33% of my advantages at any given moment. So we're going to do this. You guys can take these pictures. You can post them in the room. You can respect these termination conditions and say to yourself, I'm not taking that next short because none of my triggers broke the area. You can come back and you can say, well, everything went up, but all of my triggers are below resistance. There's really no reason for me to look for a long yet. Let's let the momentum increase. Let's let the trigger lines work their way through. Let's give them an opportunity to break, and then we'll look for an opportunity there. Guys, the NASDAQ is a scalded dog running through life. If you can't find your patterns on a slower chart, the NASDAQ is going to be a very difficult trading platform for you. So that's my first hour. I streamlined it a little bit. I want to go back. I just want to make sure we didn't miss anything, guys. Momentum, and we'll go back through here. Trigger lines. Define momentum, guys. When there's separation between the small and large, the momentum is its best. We're going to look to buy a pullback to Fibonacci support. We're going to look to sell a pullback at Fibonacci resistance. And when the momentum is there and it's the best of the best and everything is up and we're taking our opportunities and looking for our opportunities, the next step is to make sure that there's nothing in the way, that we didn't reach Fibonacci support resistance, that we didn't reach those yellow one-to-ones, that we didn't smack into divergence lines, making sure that the path is clear, or any third divergences. And let's go to this one because I know Ron gave us a good picture of it. A large chart mid-band if the large triggers are a full bar away. And guys, we call this the gap theory. And I think, Ron, thank you for posting that in the room. Let me see if I can find it. The gap theory is a termination condition. The gap theory allows us to recognize when the mid-band may be behaving as a termination condition. Let's see if Ron's picture sums it up beautifully. Not quite. Not quite. So I'm not going to use that one for the lesson. Let's go back to the live market and let's find the gap theory. When is the mid-band a termination condition? I've got so many monitors. Even off of a termination, notice how the large triggers don't bend. Price reaches this mid-band, and guys, it really is a pretty easy recipe. If price reaches the mid-band and the large triggers are a full bar away, meaning that there is room for an entire dynamic Renko bar to print before it comes in contact, this is the gap theory, guys. This is the gap theory that likely closes the gap, sucks it back up. And this is the exact same picture that we had when we learned termination conditions. Price reaches resistance with strength, retraces, large triggers don't follow. Price reaches resistance, divergence high, resistance with weakness, and that's what precedes the reversal. Guys, we trade patterns. And straight out of termination conditions. This one, I believe, is from 2021. Price reaches resistance, pulls back to the mid-band area, triggers don't follow, pulls back into the area with weakness. That precedes the reversal. Does that look about the same? Pretty close. So we're just trading this gap theory, guys. And when the large triggers are a full bar away, that mid-band is likely to hold. Let's see if we can find another one. Resistance in the mid-band, large triggers were a full bar away, closes the gap. Mid-band resistance, closes the gap. Guys, you see it over and over. There's that mid-band, closes the gap. So it's not telling you to go long, it's just letting you know, don't go short. Because it's likely to go up to here before it tries to push down again. So, guys, that's the first hour. It's the first hour. The first hour is the same every hour. I'm working on new materials. Guys, once again, termination conditions for the win. Is it just me or is it outstanding to know where the market is likely to stop? To not be lured in to smalls below the large because the path wasn't clear, and look at how the market reacts. That in itself, from fib to fib, we're just going to find the highest possibility entrance between the trouble spots, right? Notice how the large triggers never cleared the area? We never had a clear path, guys. It came close. We had momentum, but the large triggers never cleared the area. What did it look like? If you took the pullback, it gave you a good bounce. And divergence into the area says, hey, we haven't cleared it. There's your loss of momentum. Without a clear path, we're likely to push lower. And sure enough, it did. And I know that because it's a pattern. So I'm going to give you guys a couple things here. I already gave you the spreadsheet. Guys, I want to give you a plan. So as you learn these indicators, as you learn to read these indicators, having a really solid path that you know what you're looking for, you know where you're looking for it, you know why you're looking for it. Guys, this builds so much confidence. So this is what I call the KISS plan. This is what I call the Keep It Simple Sunshine plan. And the KISS plan is a stepping stone in your learning journey, guys. The KISS plan is the alpha. The KISS plan is the beginning. This is step one. This is 85 feet of concrete on which to build a skyscraper that is your trading plan. It's designed to optimize your chances of success with the high probability trend trade. It's designed to optimize your chances of success with what we call a 50-50 trade. And the 50-50 trade is nothing more than both triggers not getting through the area yet. If that's the requirement for the break, if the large don't make it through, only 50% of my triggers are through and 50% are not, which means that the path isn't clear, which means that I don't have rule number 2 met, which means that I can't give up momentum. And a divergence is certainly a loss of momentum, and it means that I can't give up an entry area. I have to have the best of the best entry. But that's your second trade, and I'm going to give you a plan for it. But through simulation, study, class feedback, and continuous practice, that's right, guys, you got to work. If you want this to become easy, you're going to create your plan. You're going to create the Roku plan. You're going to create the Joel plan. You're going to have the Adriana plan. And it's all going to be based on your experience reading the indicators, guys. It's all going to be based on your ability to read charts. So the simple plan for consistency, as outlined in the KISS plan, never fight the large chart direction or triggers. Guys, never fight the direction that the people in charge are moving the market. Never fight the momentum that the people in charge have established. Good morning, Miss Debbie. This will eliminate, I would say, 70% of the typical losers that new users take. Trade with the flow, guys. Trading is like a lazy river at the MGM, right? Pina colada, each hand, in your inner tube, and just float. Just let it happen. Go with the flow. Never fits, Mark? What never fits? Oh, never fight. Amen. So guys, we defined our entry. We defined it where the market was most likely to continue. We did that with the high probability trend trade. This entry is the cornerstone for everything that you're doing, guys. It is a strong top or bottom, a termination that reverses the market. It is odds favorable momentum. It is no terminations, and it's an area for entry inside of triggers. This entry is the best of the best. This entry is the one that creates the most success, that wins more than it loses. This entry is the trade that gets you confident as a brand new user. And it's methodical, right? It's mechanical. There's not a lot of wiggle room in this one. And that aggravates new users that want to be more active than profitable. But this entry creates the best chance of success, guys. So this is the first bite of the elephant, right? Everything that we went through, entries are the first bite, and that bite has 4 pretty good chews to it. The beginning for every new user is identifying direction. It's understanding momentum, right? So when you're good at this, study this. And then once you have momentum, let's make sure the path is clear. That's number 3. So when you're good at this, study this. Take a lot of pictures of termination conditions. Take a lot of pictures of strong triggers breaking termination conditions. And then once you understand these pretty key, simple concepts, guys, you're going to work on refining to get into the market where it's most likely to continue. My job, and I love my job is to walk with you every step of the way. Is if you have a question about momentum, my job is to provide clarity. If you have a question about termination conditions, my job is to review termination conditions until you're comfortable. And if you're not sure about those entries, guys, my job is to make sure that you are. But you have to do your job. You have to post in the room and you have to tell me why. If you never ask for help, I don't feel inclined to make your phone ring and just ask you if you're doing all right that day. Once you get into the market, you've got to do something with it, guys. So the same way we kept it mechanical for the entries, we're going to keep it mechanical for management initially. And it all revolves around getting in at the best of the best spot. It all revolves around areas inside of favorable large triggers. If you get into the market where it's most likely to continue, if you can identify that window where it's most likely to bounce, well, then you understand without question where the market shouldn't go, 4 or 5 ticks beyond that window, and that is your stop placement. And once it's there, there's nothing to do. It's either going to run you over and take your money. It's a small price to pay. It's a cost of doing business. We manage it down to the least possible risk through great entries. Or the market gods are going to smile in your favor and they're going to give you a reversal bar. And once you get a reversal bar, your stop is 2 ticks above it if it's a short. Your stop is 2 ticks below it if it's a long. So you've gone from $200 worth of risk or $150 worth of risk down to about $60 or $70 worth of risk. You keep managing your risk before you ever manage your profits. And profits are predetermined for the new user. Profits are easy to reach for the new user with all that momentum and a clear path. Your first target's only $100 off in the distance, guys. And that's really, in most cases, a pretty ridiculous first stop. But what $100 does is it just creates confidence. You hear NinjaTrader tell you, good job, you just won. You see your account go up. You are going to move your stop to break even so that you have absolutely no risk on the trade. And guys, we do that for the new users because what you're doing is you're developing trust. You're developing trust in the idea that the only reason you ever took that pullback is because the large chart said down, because the large chart had momentum, because the large chart said that there was nothing in the way. And with all of those advantages, it's pretty freaking easy to hit $100. And you go break even, so you feel better as a brand new user holding on for your second target. And it's only $200 in the distance, guys, which means on a two lot with every advantage in the most just methodical management ever, this becomes a $300 trade if it hits it. And guys, it's not difficult to hit $300 with all of these advantages. And a lot of you are like, well, Mark, I've got to make $1,000 a day. To which I reply, that's some BS, guys, because $300 a day is a $72,000 year, and I feel like most of you would be okay with an extra 75 or $72,000. Let's see if we can find one of those cool entries. That was not a good one. Let's go back. Let's circle the tail because I want you guys to see the whole process. Termination, full reversal, there's momentum. What did it look like at the circle? Holy smokes. You guys want to go through it together, the entire management process, the entire momentum, everything that we do to get into that trade? Because this is how you can practice. I went back and circled a tail. But gosh, this is exactly like the manual. Strong in creates a bounce, weak in creates a reversal, smalls begin to get below the large are wide, everything is below the fibs. Guys, look at this look. This is the best look. The mid-band isn't a termination condition. Those large triggers aren't a full bar away. Guys, rules 1 and 2 are met on the large chart. Let's get rid of the cheater here. The bottom of the bar hasn't reached the divergence low. The smalls are breaking below the large. It's coming from a termination. Guys, this is the look that we hope and pray for. Does everybody see it? Are you comfortable with the look? We're doing it when it's not moving because it's easier this way so that you can catch it when it is moving next. This is crude oil. When that's happening, my small chart's moving down too. It keeps just cranking. It's like, I'm never going to get paid. Whoops. And then I'm going to hit the wrong button. And then you're going to see this reversal bar. This reversal bar says that there's a group of people with enough money to fight these guys, to fight the people that are creating momentum, to fight the people that have established the trend, to fight the people that have absolutely no areas to react to. And when they give you this reversal bar, next-gen users, I want you to do this. Circle your triggers. There they are right there. I don't have any areas inside of them yet, but these are coming down like an eagle swooping to the water, which means that this mid band, these one-to-ones, they're going to be super close to the bottom of those triggers if price just pulls back. And look how they come together, and look how they collide. And guys, price just pulled back to an area inside of favorable large triggers, and that is the only line on your chart at those triggers. This is your entry for the highest probability trend trade. Can I get a yes in the room if you're with me? Termination, reversal, momentum, clear path. We're going to sell high. We're going to sell at the pullback to the area inside of favorable large triggers. Where does my initial stop go? I don't know, 4 or 5 ticks beyond, right? That's at 98. What do you say we go up here around 03, 04? There's my initial stop. Let's see what the market does. Oh my gosh, it's coming up. I'm negative and I'm panicking. And it's doing it again and again. But there's my reversal bar. And now my risk is 5 ticks, guys. 5 ticks altogether. There's my reversal bar. If I'm in at 98, I only have to make it to 88 to make $100. And there's my $100. And my stop is break even. And from 88, I only have to make it to 78 to make $300. I have no risk on the trade. I have momentum. Everything is good. And I just made $300. And let's put the yellow box at the top. Make it a little bigger. And you'll see that it's right at the top of the tail, right? We don't trade the tail. We trade the pullback. We don't try to anticipate the top on the large chart. We just line it up with an area inside of triggers on the small chart. And guys, this is it. This is your bread and butter. And all that momentum from a termination, it goes right to the termination condition. So your $300 trade begins to grow. Turns into a 350, a 400, a 500. Maybe you carry it all the way to Fibonacci support. And if you were in at 98 and you're out at 68, guys, that's 300 per contract with all that momentum and absolutely nothing slowing down. My goal for each and every one of you is that you can find this entry, because once you find this entry, life gets easy for you as a trader. Once you commit to trading advantages rather than opinions, life gets easy for you as a trader. Most current bar says momentum. Most current bar does not say a clear path. I still have areas that aren't quite broken. So that's where the KISS plan comes in on the second trade, guys. That area not broken. We're going to insist on momentum because strong triggers break areas. We're going to insist on momentum on the small chart because strong triggers break areas. And you're going to tell yourself no divergence on the smaller, faster chart, because if I have it, then I'm losing momentum. And if I'm losing momentum when I do not have a clear path, let's go to the cool little slideshow here. Well, then 2 out of 3 of my advantages are gone. Guys, I don't want to be in a trade with so many advantages missing. I'm okay to give up a clear path, but not at the price of momentum, not at the price of an entry area. So this KISS plan is designed to keep you focused on not forfeiting that momentum, so much so that it reminds you that if there's divergence, don't take the trade. And it reminds you again that if divergence prints, don't take the trade. So guys, this KISS plan is designed to help you be successful. This KISS plan has seen new users get funded in those prop firm accounts within their first 30 days with Nexgen. The KISS plan revolves around nothing but advantages. And that really is my goal for you guys, to simply speak to yourself in terms of advantages. My most current bar, I have momentum. I'm in the momentum phase. This is the absolute best look for selling Fibonacci resistance on a smaller, faster chart. On my large chart, I do not have a clear path. 77.17 hasn't quite broken. Divergence is printed on my small chart. My small triggers are not outside of the large triggers on my small chart. This is a trade that falls outside of my rules. This is a trade that I'm not going to take because the KISS plan tells me not to. This is a trade that I'm very comfortable missing no matter what happens next because the study has been done. I've back tested, I've taken pictures, I've annotated charts, and I know that I'm giving away too many advantages to be willing to risk my money at an area. So, guys, that's the plan. Are there any questions? Um, that went 10:09, so that's pretty cool. I'm going to give you guys, if you want, I'm going to do this. I used to drop all the pictures in the room individually. I'm going to give you guys my PDF if you want it, right? To go through the order. There's no storyline with it. It's not me flapping my gums to it, but you can take a look at that and go through those pictures. It's an order of operations. It's a reminder of advantages. And let me know what you think about it. Let me know if it's helpful. And please, guys, I always value your input. If you feel like there's something that I could do to increase clarity. But for now, I'm going to take 5 minutes. I'm going to go stretch my legs real quick. Um, He can answer you there. All right, guys, so let's go through and let's start looking at some pictures, but just for grins, let's talk about how momentum for the win, right? Weak triggers, reversal, divergence print, strong triggers, break areas, and the market continues down. And I think that if there's anything that I want you to get out of this classroom is to begin to trust momentum, to begin to trust the idea that momentum fixes things, that momentum pushes a market, that momentum is just a huge help. All right, so Cav, we're going to get you to change your pictures, brother. So we're going to start with the large chart. Large chart says small triggers down. Large triggers are trying to come up. You do have divergence, but see how they're flat and lifeless? And I think this is the lesson that I wanted to get on this one, that maybe I didn't relay through all the typing. So if these are flat and lifeless, and this is a great chart reading lesson, we can just take them out of the equation. So if the and guys, this is how I become a better teacher when you guys post. So thank you for this. If the large triggers are lifeless, flat, they don't help, right? So they're just gone. Get them gone. Don't even look at them. So then you have to ask yourself, well, what's the other momentum indicator telling me? Your faster moving momentum indicator, small say down, right? Small say that there is momentum coming down. And then Cav, if we go back to, if you've listened the last couple days, when we talk about momentum phases, your smalls are below and outside. Your bars are outside of these small triggers. That is very much a momentum phase to the downside. So the large triggers get removed. They're flat. And then price is on the wrong side of the smalls, and it's coming down fast. So really, your large chart simply says immediate momentum down. Does that make sense? I want to go through the chart read. So I always start on the large chart, and I say on the large chart, well, if my immediate momentum is down, let me see what the small chart says. Can we agree that your small chart very much says down as well? Large chart immediate momentum is down. The long doesn't quite work. And everything is still down, right? And then you're just like, I'd see, and this is where I was saying why. What made you feel like long was the way to go there? Like what? And I'm not saying that it's a bad thought with the triggers above support and stuff like that, but this is where if you identify, this is why. This chart said strength down. Well, I can't find a reason. This says strength down. I can't find a reason. So you said white bar with green dots, you took the trade. And then I'm going to point something else out, guys, and we do this on market flow. Your immediate momentum on the market flow was down as well. And it was cranking down, and it was looking good, and it's on the wrong side of the small triggers. So you actually have strength down on the wrong side downtrend, and your entry, hold on, your entry was, you're making me work with these big pictures, 91.25. And man, I'm so guilty of this, which is probably why I recognize it so well. Your entry was 91.25, which means your entry was right here. Does that make, are you following me so far? So you didn't take the bar because you didn't take the trade because of the white bar with the green dots, because it hadn't even begun to build yet. It hadn't even begun to form. And what it looked like at 91.25 was more like that. Strength to the downside, pulling back to those fast triggers. And I'm not beating up your trade, but what I'm saying is that a little confirmation somewhere, some chart that gives you some, nothing set up on any chart, and then you are capable of getting paid. And this is what I do. You're looking for your rules to be met on the other two charts. How's that? I know that you don't want that answer. I know that you think there's some magical secret on the market flow chart. So here's what you would look for. And this is a whole nother trade, and you've got to go back and study these rules. If this termination is true, if these triggers roll and then you get a white bar and a pullback, there's your entry. So you're about 4 to 5 seconds early on this, and there wasn't a trade. There was zero market flow trade here. And let me see if I can find a picture that helps you out. And this comes from the PDF that my brother and I built the other day. Let me see if I can find it real quick. I forgot where I put it. Hold on. And since this is your trade, we're going to talk about it. Momentum, 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 momentum. We have so many trades. Here we go. So this is a good look. If the termination condition happens, Cav, and then I get a white bar, I'm looking for a pullback when the triggers roll. If the termination happens and I get a white bar, I'm looking for a pullback, but I want these strong triggers to be in the direction of the trade. If they're not, it's tough. So termination, smalls get below. That's just an HVA trade. Let me see if I can find a better picture. Termination, termination, letting the white bar happen, letting the small get through creates an advantage. And none of these are really good pictures. But that's where you get the white bar. There's your pullback. Large chart says down. So what you're doing is you're kind of putting it together. The white bar becomes a hey, let's look for a trade, not hey, there is a trade. Does that make sense? It's not a hey, there is a trade. It's a let's look for the trade that sets up after, but we only do it when the termination condition is solid over here. And honestly, man, fighting those triggers, and you got away with one there without a doubt. So we'll keep going through and we'll keep refining. And guys, this is how learning something new works. So Cav, I want you to make every mistake that you possibly can. I want you to take every trade that you think you see and do it just like you did it on Simulator. And we'll just keep breaking it down, right? We'll keep breaking it down until you get exactly where you want to be. I do need you to try and tighten these pictures up for me a little bit, though, if you can. I don't need to see all of this because it's hard to read. So let's go large chart read. Large chart says pivot, stop out, no triggers through, reversal. And let's talk about momentum phase, Kaz. Momentum phase on the large chart is up. Bars are outside, so we've got some up action happening. Large triggers are up, synthetics are up. Pull back to them. And I love the entry. I love this trade. Termination, momentum changes, triggers roll. Hell yeah, Cav. This is beautiful. What did the market flow chart say about it? Where were you in? You were in at 91.90. See how your small triggers rolled? They're facing the right direction. The fast triggers rolled. And then there's a close right above them. Dude, Cav, that's your long. If you want to use a market flow entry, it's the close above the fast triggers. You're in a couple ticks later, but look at where the close lines up. 93.25, 93.50. It lines up with the close on the correct side of the small triggers, which you know creates an advantage rather than trading against them, and it makes it an easier trade. Does that make sense? I love this trade. You rock start it. Maybe a little earlier. Close on the correct side creates a huge advantage, and it also gets you on the correct side of those faster triggers. What you'll find, Cav, is if you never fight the fast triggers, if you never fight those fast triggers, it's going to keep you from taking a beating more often than not. But it has to start on the large chart, and your large chart read was perfect, and then your small chart read was perfect, and then that market flow chart gives you confirmation of what it is that you were looking for. And I think that's the key. When you're looking to take advantage of a top or a bottom, you've got to let the top or bottom happen. Good stuff, man. And this is fun. I love helping people grow with the software. Now we're getting into chart reads, right? So large chart, third divergence, momentum, everything is up. Everything is up, and you take a pull back to the mid band. It's just a great trade, right? Because of the termination condition, we're not expecting these one-to-ones to be a deal breaker. Because of all that momentum, because of the great termination, because of everything going up, you're willing to take a shot. I love it. I don't think you needed market flow for that, but let's see what it said at the spot. Let me see where you got in. 17,500, 17,500. The fast triggers are up. The small triggers are up. It's not odds favorable, but when you get this little one down, one up with the strong triggers up, and it corresponds with trading with momentum, and it corresponds with trading from the area, everything is up, and that's what helps, and that's what gets you in, and that's what gives you the advantage. Nice. Don't even worry about the mid bands here. We don't worry about the dots here. We're looking for momentum. We're looking to trade on the correct side. Does that make sense? Great stuff, man. And I promise, once you get over the overwhelming look, it really gets easier. So there was your termination, right? Everything says down, Cav. What did it look like over here? Coming off of resistance. What did it look like here? Up at that top. Strong triggers up. Don't fight them. Let them roll. There's your first close below them when they roll. Off of the termination. Do you see that, Cav? There's your first close below. Let me scroll back. I made it a little small. There's your first close below off of the termination that's likely to hold. And then if you want to be a little more conservative, they get below and it pulls right back to the HVA, right at the triggers, off the termination. And that's your more conservative at 82. And it hasn't blinked since. Pretty cool, right? It just takes a little bit to get used to it. So guys, if you're a two-chart trader, if you're a high probability trend trader, this is a little advanced for you. But it still goes back to the idea, smalls below the large. It still goes back to the idea, clear path. It still goes back to the idea, this area is likely to hold because of the trigger line location. So we're just going to keep compounding and getting good at it. Nice job. Jeremy P. Pivot stop out that doesn't break, three divergences in the same area. The small triggers roll, putting you in the momentum phase. And there's a little snapback right to the triggers. And let's see what your market flow chart said. It said that you let them roll. The smalls are breaking above, and you let it get above trouble. You're trading from the correct side of the fast triggers. You're trading from the correct side of the small triggers. You're trading from the correct side of the small triggers, and you're out at trouble. Great job, Jeremy. Nice trade. And then, did we see this one already? This is Joel. Joel says momentum, momentum, pull back to the area. Can't think of any reason not to get paid. Joel, beautiful trade. Beautiful trade. And Ron with the acronym trade. So what's the flip side of understanding where the market should stop? Becoming kind of a badass and being able to take little counter trend trades, guys. Um, and hold it. It's the counter trend. Hold it. I'm going to get the acronym right. Counter trend white bar reversal shouldn't work trade. Everything says down. Momentum is strong, but Ron knows when you get divergence from a fib at a term, it usually goes back to the reversal bar marker. And he's absolutely right, and he's built a plan around it. It's absolutely beautiful. It really shouldn't work. But patterns repeat themselves, don't they? And then price hits area with the large triggers a full bar away. And this one's close, Ron. But do you see how your reversal bar marker is all the way down here? Where do you see 9 out of 10? Oh, it works 9 out of 10. So because these large triggers aren't quite a full bar away, your reversal bar marker is all the way down here. Gap theory is really not into effect here. Does that make sense, Ron? So resistance is likely to hold based on the trigger line location. The one-to-one certainly help you when you're getting in on the way down. But with no triggers through and 3 divergences and the large triggers this far up, you managed it beautifully. That one is probably going to be the 10th one that doesn't work as often, but it was good. And then Joel, termination, hasn't created the reversal yet. White bar off of the termination, just kind of confirms the area. Blue trade. So Cav, this is a good one too. And Joel, I'm not sure what you're doing with this picture, just chart reading. But this is good market flow, and I don't know why you're looking for more, but do you see it, Cav? And Joel, do you see how it happened here, though? There's your termination, right? There's your termination. Look at how the fast triggers roll. Guys, that's it. That's the key. I hope it goes, I hope it goes, I hope it goes, I hope it goes. It went. And that's the one that gets you back up to the problem. Good stuff. Joel, it's a good read, bud. Price at the mid band, large triggers don't follow, mid band holds. There's that gap theory. Beautiful gap theory picture. Fibs hold, area didn't break, right? No more longs, but we're not going short. You're identifying consolidation potential. Nicely done. I love it. And guys, great job. That's all the pictures that we have right now. So let's talk about the live market. Weak triggers push us all the way up to the mid band. You're doing great, dude. When we get to the mid band, these areas have the potential to hold, but all the strength is against it. And then Cav, I want you to look at your chart over here. Let's see if we get some indication. Fast triggers just rolled. I don't have a trade here. But do you see how if it's really going to hold, they're going to roll, guys, for you guys using market flow? That doesn't give you carte blanche to trade into a fib, but at least gives you a fighting chance waiting for that momentum to slow. Termination, termination, termination. There's your white bar off of the area. Doesn't mean that there was a trade, but it's got you thinking if things slow down. but your small triggers are still above the large triggers, even though they're red. That's a tough look. It's a lot of momentum to fight if you're thinking about going counter trend, guys. And now the termination pushes down. The momentum is building. The large triggers aren't the best look. They're not wide yet, which means that we look for this one. And then what's the tiebreaker? The small chart has odds favorable momentum and pulls right back to a mid band. And down it went. And then one more time for you guys using market flow. Momentum confirms. One down, one up, and off it goes. Then don't open 3 workspaces. Do it 2 at a time. Cav, is that helpful today a little bit? I'm just trying to look at it in terms of momentum. And then your small triggers roll, right? Now we're on the wrong side of everything. You're just kind of losing momentum. And Cav, you got to take it slow. So everything that we do, and I'm going to pull up the PDF real quick. I'm going to pull up the actual PDF. I think I've got it on here. And I'm going to go down to the momentum section. Jason learned you on that. Jason's pretty smart, isn't he? Do you have this PDF, Cav? It's not the best of the best. I think we still have a lot of work to do on it. But this was the first run where my brother and I sat and brainstormed as hard as we could on Sunday morning. Let's see if we can get it to open up real quick. Here we go. All right, so that's management. Let me get down, and we're going to get to the momentum trades. So here's the first part. For HVA and momentum trades, guys, we're going to introduce a third chart. It's a range-based chart. It's not a dynamic Renko chart. Fixed ticks on the bar, and it uses different settings, and that's why it looks different. John wanted to put that explanation in there. The 8-3 are the super fast triggers. Your other triggers are the small triggers. So there's 2 trades that come off a top or a bottom, guys. There's 2 trades that I teach that come off a top or a bottom. Everything depends on a good top or bottom. Rule number 1, good top or bottom. Reversals or breakouts of Fibonacci are preferable. Make sure the trigger lines do not break beyond the area for a low or for a high. Pay attention to the location when doing this trade. Making sure that there's no termination conditions. And then entering at the areas, the HVA line. So this is the first one. And here's the key. Rules 1 and 2 require a working knowledge of termination conditions. And it brings you right back to the termination conditions section. So those tops and bottoms are so important. And then as you come down, there's a couple different looks. There's 2 looks, and I think that this is one that's kind of a little different for us, guys. Before we get into using HVA as an area, not every top or bottom happens at fibs. For the high probability trend trades, the great tops or bottoms happen at fibs. But when we get into the HVA, when we get into the momentum, weak triggers with divergence may cause a reversal if the HVA agrees. So you're going to see this look as well, guys. Weak triggers, and then in that momentum phase on the smalls. So the HVA entry is simple. After good top or bottom, weak triggers, reversal, momentum phase, you're going to use market flow, that green line, to look for a long trade if it supports over here. Weak triggers, momentum phase, looking for that HVA trade to take you down to the bottom. So that's the first one off tops or bottoms, guys. The rules are there. It's in the user guide. And then the momentum trades, good tops or bottoms again, not indeterminations again. And then it's entry at the areas with triggers, making sure that you have odds favorable momentum. making sure that the area breaks and gets pulled back to. So with the momentum, the area breaks and gets pulled back. And then Cav, this becomes the look that you're looking for. You guys that are looking to incorporate the market flow chart, you're looking for odds favorable momentum. And when it pulls back to the area, it's what we call a one down, one up look with odds favorable. And it's a great opportunity to capitalize on the momentum of the trade. Everything says down. Let me show you odds favorable, one up, one down. Let's see where the top of this bar lines up with. Termination, momentum phase, pull back, one up, one down with odds favorable. So guys, this is your momentum trade. This is the look. This is the look. And notice how it's not odds favorable. Notice how it's not even a downtrend yet. But because of the no triggers through termination, because of a couple divergences, because of the momentum, you can catch the momentum breakout heading to the downside. Guys, this is a trade that if you don't understand momentum, if you're not good at termination conditions, it's going to become challenging. These happen pretty close to the termination areas. Small triggers have to break the area. Price pulls back. Here we have one up, one down, down it goes with odds favorable momentum. So it's not the momentum trade or the momentum chart, the range chart that gets you into the trade. It's the odds favorable. It's the good bottom. It's the odds favorable. It's the pullback and the extension. The pullback, one down, one up. And then the cool thing is you can also use it for management. Termination, reversal, odds favorable, one up, one down with momentum, down we go. Guys, you can build a career with this trade, but it takes a little patience. You have to wait. You can sell on the way up into the area. Your stop goes above where the second bar becomes a third bar. And then you can even use these one up, one down scenarios to manage when you're in a trade to get more out of the trade. Cav, it just takes a little study, brother. It really does. It just takes a little bit of time, and then you find yourself in a pretty good position. Termination, strong triggers, pull back to the mid band, right at the large triggers. I didn't need a market flow chart for this. That's a good look. Hey, good morning, PFI. Termination, strong triggers. Haven't broken the area yet. The momentum is strong, but the path isn't clear. So it's okay to sit on your hands and do nothing. Probably going to get a little bigger push. It's all about rules. So as you go through and you grow with it a little bit, everybody, there is info. Yes, PFI, definitely. Strong triggers in. Little push down, weak triggers in. Let's see what they do, guys. You're struggling with the one up, one down. So we just kind of went through it. What's the first thing that has to happen? Good top or bottom, right? Struggling in general? It's because you're smart and you're starting to trade what you think rather than what you see. I see it a lot, and I may be wrong on that. But what I find is when you just slow it down. Weak triggers with divergence, momentum phase. Let's see what the pullback look like. It's been a rough couple days, PFI. There hasn't been um, a ton of follow through. Been watching it. I've said not my trade more times in the last 3 days than I think I ever have. But there's the recipe again. Weak triggers, divergence, momentum phase pulls back to the small triggers. Smalls break the area, pulls back to the area. One down, one up with odds favorable corresponds with an HVA. Um, are you still posting charts? Are you still getting feedback, PFI? Are you writing why you're doing everything you're doing on every chart? That's one of the things that I found that you have to do is when you're having challenges, man, we're here for you. Come back. Give us a chance to help, right? You know that I will. All you have to do is annotate a chart, drop it in the room. I want to help you. I want to help you guys. So guys, there's crude oil. Strong in, bounce. Weaker in, two divergences. See how things are rolling? It looks like it's changing. It's still not a short trade. But you can see the fights, guys. With this much momentum, they don't like to stop in their tracks. It's been a tough week, I think. I've heard that from a lot of people, JW. Um, my tough weeks happen when I try to catch more trades. My tough weeks happen when so if I'm taking the wrong trades, I have to notice that, right? I have to be willing to say, man, I'm not taking the right trades. I'm a little anxious. I'm going crazy. And then I have to try and pull myself back. And then I also have to make sure if I'm taking the perfect trades and they're not working, then there may be something emotional happening in the market that um, isn't normal, right? If every trade that I normally take that wins more than it loses is losing more than it wins, then it's okay to take a day off, right? It's okay to take a break. The patterns are outstanding, but we still don't control the market. But if you have a tough week, why not bring them in here? Why not bring me a couple trades? Don't bring me your winners, guys. If you're having a tough week, bring me your losers. Started taking a lot of one lot trades after a tough week. Why not, Jeremy? Right? Why not take one lot trades? I'll do that sometimes. Why not? But even the wrong trades on a one lot are the wrong trades, right? Um, well, it's because you know that you can't manage for the big move, so you're probably getting paid on them, if that makes sense. Less fear. And that's how you learn for the most, guys. Just post. Post in the room. Everybody goes live and they're like, okay, I can't use Mark anymore. Guys, you got me. As long as I work for Nexgen, you've got me. It's pretty cool. Um, but if I take a trade, right, and let's just say I'm going to come back here and I went short. And guys, this is what I want you to do. If I went short right here and got run over, who can steal this picture and annotate it for me? Anybody? Who feels brave? Who feels brave enough to take this picture and annotate it for me? I want to show you something. Roku, will you go through it with me? We'll talk through it. I'm 3 years in, Cav. I learn something new every day. So Roku, the first thing that I look for, brother, is momentum, right? So I'm looking for this separation, and this is where I'm looking right now. Whoops, I'm going to show you because it's historical, but I'm essentially looking at this right here, this bar. What do you think? Roku, do I have odds favorable momentum? Do I have strong triggers there? Or are they weak? Right where the arrow is. I'm looking right at the bottom of the bar. What do you think? Strong or weak? Give me an S or a W. There's a huge gap between the smalls and the large. The large are wide, they're angled in the direction of the trend. The smalls are below. It's like scissors open, ready to cut. What do you guys think? Is rule number one met? Absolutely. Rule number one is met. Okay, I'm going to draw another arrow. Price didn't reach an area, and my trigger lines got through the area. What do you guys think? Do I have a clear path? Rule 2, no termination conditions present. Does my large chart tell me that I've got a pretty good chance of going down? Everything's pretty kick-ass, right? Pardon my French. So rule 2 is a yes too. So let's talk about what that means. Large chart says, without question, I have momentum from strong triggers. I have a clear path from no termination conditions. What am I doing? I'm talking to myself in terms of advantages, right? And guys, I've got advantages. So when I have these advantages, my job is to look to the smaller, faster chart. So I'm looking for an entry. I'm hoping for an entry. So at the time of the reversal bar, I'm looking from the top of my triggers to the bottom of my triggers. Oh my gosh, that's a pretty big space, isn't it? Those aren't one on top of the other. But where's my only line at the first reversal bar, guys? It's up here. This is my window of opportunity. This is where the market is most likely to continue. On the first reversal, give me a Y if you see it. Because this is important. This is rule number 3. Rules 1 and 2 are met. Rules 3 is not. Here, now I get a second divergence. And once again, the only line that I have inside of favorable large triggers is resistance here. It's only one line, but it doesn't get there. So far, so good. So I'm not in, and this is pretty simple. Not my trade, not my trade. And then on the third reversal bar, who can tell me what they see on the third reversal bar? First two bars don't reach entry point. Divergence, perfect, Roku. Third bar is third divergence. This is a termination condition. No trade. You guys comfortable with that? And what do? We avoid a loser, right? And guys, this is how simple it can be. And I say simple, it's not simple because you have to work at it. You have to be able to talk yourself through this every time. So let's go to the admission part. Who took it anyway? Anybody in the room? Did anybody take it in the room? Everyone's like, hell no, Mark, the rules weren't met. You guys want to know the truth? When I was brand new learning to read my charts, putting all this together, I went short right here and got stopped out. And then I went short right here and I got stopped out. And I got short right here and I got stopped out. Because I was so married to the idea that I wanted to be in a short and it didn't give it to me yet that I forgot to do my chart read. I forgot to speak in terms of advantages. And guys, I'll tell you right now, I've lost $600 to $800 trading against all of this after a termination condition. And I'm not saying that you have to do that to learn these lessons, but if you speak to yourself in terms of advantages, the large chart says that I have momentum, and the large chart says that I have a clear path. And let me see if my small chart gives me an entry. 3 divergences tells me don't take the trade. And this is how rules keep you safe. And guys, if you take that short, you don't want to put it in the room. Because after the fact, you realize that you traded against 3 divergences. So it's easier for you to not put it in the room, to not have that conversation. And has anyone other than me taken this short and said, there's no way in hell I'm posting that in the room. I don't want to show Mark my loser. and you still think you did everything right. Why do you think you did everything right? Because rule number one were met, because rule number two were met. And then, guys, bow, bow, bow. If you don't post that loser in the room, we don't get to have this great conversation. JW doesn't get for this to be helpful, right? Kali says, man, this looks like a fun way to break rules. I'll try it for the first time ever next week on Simulator. But I'm telling you right now, guys, if you hide this from me, it doesn't serve you, right? It doesn't change my day. But if you walk into this room and you go, Mark, I keep getting my ass kicked, and you never show me why, how can I help you? How can I possibly help you? So that's kind of where I'm going with that, guys. If you don't give me the chance to give you help, if you don't give me the chance to talk about that termination condition, if you don't give me the chance to talk about the path isn't clear, if you never give me the opportunity to tell you that if your large triggers are down, you do not have areas inside of favorable large triggers, how the hell can I help you? So, all right, that's it. That's my soapbox right there. But market's green, I want to go up. But hey, it's a termination. But hey, your triggers don't line up. And what do we know more than anything in the world, guys? Is that when the trade is right, when the trade is easy, everything freaking looks the same. When the trade is your best trade, when the trade is your set of advantages, everything looks the same. The direction is down, the momentum is down, everything is down, the areas are down. Everything is down when the market typically goes down. If the market doesn't agree, hell, it's a crapshoot. Wait for it to agree. Give yourself that advantage. All right, there's my soapbox, and I apologize for the soapbox. But when I see people popping their heads in here and they're hoping to get better, they're hoping to become better traders, hoping that I say something that's pertinent to what they have going on, oh my gosh, just post the loser, guys. Everybody takes losers. I take losers. John Novak takes losers. The best traders that I've ever met in the world take losers because that's how you learn, guys. Right? It's still not a clear path. But Mark, I thought it would go up because my bars were green. Well, let's talk about that. It's not a clear path. You market flow traders, your smalls never got, or your supers never got above your smalls. But Mark, it's an uptrend, but your rules aren't met. Your rules aren't met, guys. And gosh, I just can't tell you enough that the rules are designed to keep you safe. So I'm going to stop flapping my gums for a second. I'm going to go stretch my neck and stretch my back and stretch my legs to see if I can touch my toes. Do the same thing, guys. You're going to kill yourself if you sit in front of a monitor for 32 hours a day. Yeah, there's no such thing as 32 hours a day. And guys, let's see what happens. Rule number two, not met, not met, not met. Not met, not met. Oh my gosh, look at the consolidation. Congratulations, you didn't have to get caught in it. Some days you're the boot and some days you're the butt, guys. The better you learn your rules, the fewer days you are the butt. I'll be back in just a minute. Go stretch. That's kind of funny. So I feel bad. I walked out of the room and walked by my brother, and the dog just set off. And he's teaching his class in there. Kind of funny. Didn't mean to confuse your dog, though. Guys, large chart won, didn't it? Large chart won, but without rules met. Wasn't it cool to not get stopped out 75 times before it actually went? And then if you got mad that you didn't get filled and you went long directly into fibs with no triggers, did you manage out of it quick enough? Or you did just hope that it would break because they owed you, because they didn't give you an opportunity here? That's kind of what you're going to look at, guys, as you grow with the software, is you're going to say, man, I have to be okay with being patient. I have to be okay with not being in every move. I have to be okay with sitting on my hands and doing nothing. Because the reality is if I wait for the best, guys, it's easy. It becomes easy. And the easiest way to do that, I'm going to bring this back. Guys, this is last hour. I'm relying on you for questions, or I'm going to flap my gums. So if you haven't done it, why not go back and look at all these? Luciano, this is you, brother. Odds favorable, clear path, perfect entry, money, money. Give me a Y in the room if you see it. Momentum, clear path, entry, it's easy. Why not go back and click on a lot of these and say, let's see, odds favorable, clear path, perfect entry, easy money. I just can't stress this enough. Odds favorable, clear path, perfect entry, easy profits. How many times do you have to see it to believe it? What do you get? Is there a number? Has anyone found that number yet? I haven't found the number yet. How many times do you have to see it to believe it? Mine was like 72,000 before I finally before I really started paying attention. But that's kind of what the spreadsheet's designed for, guys. You're still counting, Cav? Yeah. So there's three divergences. The third divergence is higher, right? But Mark, the trend is down. But guys, my rules said don't try to go short. If you tried it on the second one, yeah, you might have been okay. You tried it on the first one, you made a little money. The second one, you did a little better. And it just started changing direction, right? Mama says follow the rules. And traders are so ornery because they only have 3 rules, but they try to build 75 more. The hardest thing you'll ever do is wait, right? How many trades do you take a day? Guys, when I have a losing day, I take 20 plus trades. When I have a winning day, it's typically less than 10. True story. If I go back and look at all my days, when I win quick because it's easy, it's effortless, I allow it to be. When I lose, I find myself digging a hole and then getting lucky out of it, and then digging a hole and getting lucky out of it, and eventually luck runs out. So let's analyze why we're struggling, right? Let's get it in the room. Let's talk about what's going wrong. Let's talk about what's going right. Jeremy P says, man, what is this? This is the S&P. Termination, super fast. You get in with the second divergence at the area, right? You're able to get paid. I'm not sure why you got out so quick, but there's nothing wrong with it. You made money. And then when it rolls, and everything rolls, the large triggers roll, the bars get above. It looks like you entered at least on the correct side of things. But man, you're right into problems, right? Right into those triggers. You don't have momentum yet, but you're on the correct side. I'm not sure market flow is a real trade there. I see why you did what you did, Jeremy. That was a scary one. And this is where I go back to, and let's do the same drill before. Jeremy, I hope you don't mind me pulling this apart. And are we going to shoot pool while you're in town? While I'm in town? I guess I'm in town, huh? We were talking about that yesterday. Large chart. Remember, if this Small triggers are flat, or small triggers are down strong, large triggers are flat. So we have to think of this one as momentum down. So if this one is momentum down, we got to look for stuff, right? Smalls are outside of the large. This one is momentum up. So we've got this little indecision. Little indecision. And then Jeremy, that's the tiebreaker right there. That third divergence. And I know that you got in, but I think that you probably could have done it right there. Couple ticks less, easier money. And that also comes through on your market flow where you start to get that momentum, and it even gives you a market flow signal with everything pointing up there to make it a little less scary. Good stuff, man. And then that one worked its way right to the termination condition. I think that you were starting to get the read, right? Flat, but it was coming. But there really wasn't any reason to go long yet. Not here. This divergence said give it a shot, right? And it didn't really set up. It did work out. It did work out. Momentum, pullback, area, go. Pretty cool. Cav, did you take that one? Strong triggers up. Pull back into the blue fib. You show me the perfect entry, and then I see where you entered. And then, Cav, you need to reload historical data on that chart. Your triggers look a little wonky. Show me your market flow chart there. At 94. Here you go. Check this out, Cav. One down, one up with strong triggers. But you need to refresh your data, dude. Those triggers aren't right. Those triggers are afflicted. That is perfect, though. That is such a great looking trade. Fibonacci breakout, pulls back to the area, all the strength goes up, you end up losing that momentum, and then it pulls back to the perfect trend trade. So if you took quick profits here, you're back in it right here with no hesitation, and you just took it all the way up to the divergence high with that momentum. Yeah, sometimes I'm looking at my charts, I'm like, wait a minute, that's not right. So if it doesn't look right, it probably just needs to be reloaded. Yeah. I love the trade though. As it comes up, one down, right into it, and then it's just that trend trade. Pow, pow, pow. There's your market flow signal if you needed it, but you didn't. So good stuff. Collie says Tony Robbins in his modeling of humans says we seek variety even if we're wrong. So we'll have that very psyche to sort out. Yeah, I think you're right. We do seek variety, don't we? It's like dating. You rarely date the same girl twice until you find the one that gets you. Try a redhead, I'll try a blonde, I'll go out with a brunette, I'll go out with a tall one, a short one, a fat one, a skinny one. It doesn't matter. You just kind of have to get out there and see what works for you guys. And then you meet her and you're like, oh, this is it. And then your type is clearly defined. My type is brilliant brunette, it turns out. So that's the one. If I'm out and I see a brunette, she's more likely to catch my eye because that's the one. That's my type. But I had to date to figure that out. You know, my wife had to date before she realized that she liked underachievers with a lot of tattoos. And now she knows. Look at that. Pivot, stop out, weak old triggers. Oh, it's trying to grind. Here we go. I love it. So guys, what can I help you with? What's got you vexed? What's got you worried? What's got you wondering? What is if it was just you and I on the phone? What would you ask? Right? Mark, there's nobody else here. I'm not worried about what they think. Let me show you this picture. Give me a little feedback. Because that's what it is. None of these people know who you are. Show of hands if you've had lunch with Ron C. Show of hands if you and Mike Lynch play golf on Tuesdays, right? Show of hands if PFI had you over for a barbecue. Nobody. Nobody knows anybody here. There is no shame. I mean, you're not going to see me in a grocery store and I'm like, holy shit, there's Cav. That guy trades into areas. I don't want to see him in the dairy section. There's Joel. I watched that guy miss an entry once. Better not catch me over here by the popsicles. Just doesn't happen. It's the beauty of this classroom, guys. Sergio. Sergio's real name is Lucy. Set 2 targets and strategy? Absolutely. Let's do it. Let's get this market flow nonsense off of there. So, Walter, good question. Let me go through stops and targets real quick, and then we'll answer that one because that was one. Are you talking about? So, Sergio, once again, show me a picture. Show me what you're doing instead of making me guess to show you the right thing. Show me a picture of one of your trades where your stop got hit. Can you do that for me? Watch this one. No exits where entry should be. Maybe this lines up. Everything says up, the path is clear, everything is all sorts of kick-ass. And then there's a stop right at support inside of favorable large triggers, putting stops where the market should go, not where it shouldn't. That's the biggest thing, Sergio, for most people, is taking the wrong entry and not willing to ride out the extra risk that they created. So that happens a lot. If you're jumping in early and you're saying my stop has to be 12 ticks and you get stopped out at 12 ticks, but it's at an area inside of favorable large triggers, then you're not embracing the idea that stops go where the market shouldn't go. Um, ba, 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 ba. If you're in the perfect trade and 3 divergences print, getting out, not losing. Or you keep losing your stops after you close? Maybe I didn't read that right. Sorry. Not, I read close, not close. You lose your stops after you close them? Let me get my chart trader up. So do you have your stops in place? Do you have your ATM strategy in? And guys, sometimes I'll read your stuff wrong and go on a tirade. If it's not the right tirade, correct me. Sergio, do you always have an ATM strategy in? That's the first thing. Okay, so you have stops and targets. So you enter the market. Stops in place, targets are in place. And you're saying maybe after the first target gets hit that target. You lose your stops or you lose your targets? And maybe that's not what I'm getting just yet. Do you close out? Like if you're worried about a trade, do you go, oh, I got to get out of the trade and close it out and lose your stops and targets? Okay, the setup. So the ATM strategy right here. So you have it, you take a trade, you close the trade, and then it doesn't default, it doesn't go back to it. Okay, you're on 7. Okay, so let's do this. Oh, see, this helps. Thank you. So you need multiple targets, right? So order quantity should be 2. And then you're going to have on your second target, so for example here, under quantity, you're going to have 1. Under stop loss, you'll have 12. Under target, for your second target, you want 20. Have 10 and 20. And then over here, you need to have quantity 1, stop 12, profit target 10. So those are your settings for these. This has to be 2 contracts. And then after you put those in, you are going to right click in the gray area and you're going to save template, and it's going to ask you to name it. And then once you name it, you'll be able to find it over here in your drop down. Let me know if that works for you. Sorry, I misunderstood the question. I do that sometimes. You're welcome. And just for grins, and I know you guys love it when I do this. So I had no idea, but apparently these are called instructions. My brother said that if I read these every now and then, I wouldn't have so many screws left over when I build stuff. But it may not have 7 in there. I don't know that it has 7 in there anymore. So let me make a copy of this picture for you, but I think that should get you. And then if you have any challenges with it, let me know. I can open up my NinjaTrader 7 and run through it once. But let me know that you got it, and you'll be good. I hope. All right, Joel, yours always makes me do it twice. I'm not sure why. $50.50 from a good top, no divergence, perfect entry, and stopped out tight. Just too tight, right, Joel? That's okay. Nice trade. There is no one up, one down. I don't know, Collie. I have a license for it, so um, I really don't know. I wish I had an answer for you for that. If you're using Apex or something, you get one free for 8, but I think you have to open an account for 7. So Joel, here's one of the challenges with trying to incorporate things when you're just not sure how to do it, right? No, it's okay. This is for everybody. Nowhere on this does it mention this chart, right? Not at all, not even a little bit. So what if I take that chart off? What if I put this chart over here? And what if we just say, Joel, this is a termination that creates a reversal that gives a 50-50 that has the perfect entry, and the only challenge that you had with this was that your stop was too tight. Isn't that so much easier? Too many mind, ladies and gentlemen, too many mind. I heard in the room something about a one up, one down. So I added another chart and started looking for it. I have no freaking idea what it means. But man, wouldn't that be awesome? It's incredible. It's so easy to get caught in that trap. So easy to get caught in that trap. We were laughing earlier today. If one's good, two's got to be better, right? He does. Jeremy, there's a totally different usage for it. There is a totally different usage for the one up and one down. And it has everything to do with momentum trades. It has everything to do with a market that's coming off of a strong top or bottom. It has everything to do with a market. Let me find it for you. One up, one down is a momentum trade look, not a trend trade look. So if everything is down as the momentum is absolutely crazy, it helps you identify a shorter pullback into an area with odds favorable, odds favorable, odds favorable, and this market goes up one and down one, you look for an entry. That's all it is. And it also gives you an opportunity when everything is screaming to the downside to grab that little hitch, boom, 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 and maybe even manage it. Everything is screaming down, one up, one down, I move my stop. One up, one down, I move my stop. One up, one down, I move my stop. And it gives you the opportunity to catch bigger moves too. But it's all predicated, once again, on your large chart saying that that's what we're doing. The large chart has to say, man, we're going, right? We're going up. So let's look up. We took the perfect entry. I think we're going to have a good example of it right here, Jeremy. Let me go back here and make this a little bit bigger. So let's see where this right here happened. Where everybody gets scared out of that long, right? Oh, it's a down bar. Has anyone ever done that? Large chart is screaming to the upside, didn't hit anything. Small chart gives a reversal bar and you get the hell out because you're scared. Anyone other than me done that? So Jeremy, look at your market flow chart right in the middle. You took the perfect long, right? And you feel good about it. And you're like, man, I am in and life is good and everything is up. And the large chart says go and the small chart says go. And then there's that reversal bar. But look at the trigger lines up. So when this prints, you're going to see a range right here. And this is in that manual. So when the large chart says it's not time to get out, you're going to see this down bar. And then have you seen how market flow bars create this box around the range? So that's a 21 range for the NASDAQ. It shows you exactly where the bottom of the bar will be. And what's cool is it probably starts down here. And as the bar goes up, you just keep sliding your stop below where the down bar happens. And what it does is it creates this awesome opportunity for you to not jump ship when the large chart says, hey, don't jump ship. I love this because you get an extra 10, 15 points out of trades sometimes with these. But once again, it's all predicated on the large chart. Everything begins with a large chart. Everything has to say go on the large chart, and this just helps you stay into it a little longer. But that's just a trend trade. Does that make sense? Guys, it's an amazing tool. The market flow chart is an amazing tool, but you have to learn how to use it. You have to overcome the desire to let the small chart lead the way. You have to overcome the desire to let the market flow chart lead the way. And one of my favorite pictures in the market flow section. And Roku, brother, I know that you're just learning the trend trade and how to read the indicators right now, and this is a lot. Um, but this is all stuff. This is where you're going. But you have to learn momentum and clear path first, and then everything else just kind of works out. And then my favorite thing, and this is for all of you guys that just picked up the market flow chart. Don't stare at it. Seriously, don't stare at it. If you stare at the market flow chart trying to figure it out, right, unless your dynamic Renko bars are telling you to take a trade, it should never even be seen. My market flow chart isn't even on my main computer. It's not on my main screen. I've got it on a screen off to the side as I wait for my large chart to tell me that it's time to take a trade. As I wait for my small chart to confirm what the large chart's telling me. And then if I need just a little giddy up, termination, total momentum, see how triggers break and pull back. There's the momentum on the momentum chart if you wanted to take a shot at it. Pretty cool, right? But it's still into a termination. There's just no room to run. Support, we're finally breaking. The momentum is strong, but the path isn't quite clear. But there's only one spot inside of favorable large triggers where the market is likely to continue. Momentum, not quite a clear path, no divergence. I have one line at those triggers. You guys think it'll hit it? It did. Where shouldn't the market go? Market shouldn't drop below this fib if it's going to get me. That's 6 ticks risk. If I'm in at 55, I have to make 65 for $100. I have to make 75 for $200. But what's the most important factor, guys? It's not quite a clear path because my large triggers have not cleared the divergence high. It's not a high probability trade, but it does have momentum, and it did have an area almost. But I can't expect this one to win 70 to 80% of the times. I give it a little bit of breathing room. If it goes up from here, fantastic. If it doesn't, I take a small loss because I didn't have a clear path. And watch, it'll go from here just to be a jerk. But when you don't have a clear path, decisions are being made. Fights can hit extremes. I don't mind taking losers on simulator, guys, as long as there's a lesson. 50-50 trade. If you took the area at support, you got a reversal bar, your risk was 3 or 4 ticks, and then that medium probability area is not broken trade pushed down. Support still holding, 3 divergences have printed. I've got to let this break before I go short. And it's still just floundering, right? And then if you're a range chart trader, for you guys that are working on it, your 8-3 triggers on your range chart said don't even try it because they're strong against. So what I would want is some sort of close at least on the correct side of things to get me in. But that was $175. Would life be better not losing that $175 because the areas were beyond triggers because it wasn't a clear path? Might be. All right, guys, what do we want to talk about? 50-50 is dead in the water. Sergio, were you able to get that squared away, brother? Cav, are we shedding a little bit of light on it? Awesome. Good deal. Did you? Let's go find it. There it is. Market flow white bar took the pullback. Where did you take a pullback? Into 75.0775. 75.0775. 75.0775. So Cav, momentum, that was over here, brother. Not over here. That white bar was 3 bars after your trade. Do you see it? You took the perfect trade. 100%. One down, one up. Odds favorable, one down, one up. Beautiful, beautiful momentum trade. Great way to add on to the long. But it happened here, not here. No, I said more than that. I said if you reach a termination condition and the small triggers roll and you get a white bar off the area and the super fast triggers roll, then you look for an entry. Everything is odds favorable. Absolutely. You're looking for every trade. And so one thing that you'll learn too, Cav, is you're outside of those outer bands. I don't go short from outside of the outer bands. A lot of times that outer band behaves as support, pushes it up. So it's the right thought, right? Termination, white bar. But then the second half of that, and the thing that's so important, um, tick, 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 tick. And I like it. And this is how these come together, Cav, is you figure out a little bit, and then you're like, oh man, too soon. Oh man, that's not a trade. Let me see if I can find it. That's HVA. This is momentum. That's momentum. I'm trying to find the one off the bottom. I'm going to see if I can find the look real quick. 948. All right. Let's put it all together. And that's still not the perfect look. But let's see if we can kind of put it together. So when the termination begins to push the reversal, right? You've got a great termination condition there, Cap. So large chart says termination. And then your market flow chart at the same termination produces a white bar. That just kind of confirms it a little bit. But look at the location of your trigger lines. Look at how they're still below, right? That's red. That's down strong. It's just too soon. But this white bar kind of confirms it. And then after the termination, after you get it, this white bar helps produce the HVA. That's the one, man. It's that little bit of patience right there. And let's look at the difference on the other two charts if you just wait for the HVA. See how the large triggers begin to roll? See how the small triggers are up strong? See how that's a high volume area. All right, Cav. Couple things that I think are going to help you a lot. Dun, dun, dun. Let me double check. Oh, that's just for moving the bars. Breakout. I'm trying to find something for you. Here, I'll show you the best example of what it means. I've got it. So sometimes I got to think things through. I got you, though. I just thought it through. And thank you. You're keeping me busy. And I know that you've seen this picture, but now that you're looking at market flow, it gives you a pretty good idea. So we're going to do this. I'll take a picture of my picture, and we're going to do good stuff. So, not just flapping my gums. Nope, this is good stuff today. So, and then Cav, here's the patience piece too. Everything says up into fibs, right? And this is where we all get the idea that the fibs may hold, that I think they're going to hold, that they might hold. And that's very much what this is. That's, I think, resistance will hold. We're letting the triggers settle down. We're letting the smalls get back below. We're letting the large turn, and then it's the exact same price. So what happens during that process? During that process, the buyers fight all the way into the area, and the sellers push back a little bit, but they can't really get anything done because there's so much momentum, and the buyers push again, and the sellers fight back, and the buyers push again, and the sellers fight back. And here's that termination, Cav. There's that white bar. There's your triggers rolling, and it's this white bar. So what it is, it's a breakout bar coming off of the reversal, and when this bar closes lower, it creates this pink line. What this pink line represents is, all right, buyers, we fought you, and you fought back, and we fought you, and you fought back, and we fought you, and you're fighting back. But let me tell you guys, if you come to this line right here, we're going to unload every freaking gun that we have on you. And notice that the momentum is down. Notice that the triggers are down. Notice that that pink line, that line in the sand, is inside of the triggers. Cav, this is an HVA trade. This represents the highest volume of the breakout bar, and this is the most common spot where the sellers are going to unload if the conditions are right, if the rules are met. Awesome. And you'll see it a lot. And let's just go play, because hell, this is what we do, right? And this is the S&P. So, and this is why we don't just trade arbitrary lines. The rules have to be met, right? The buyer said, haha, a line in the sand, but everything's aiming down, and that shit just breaks, right? And then the buyers put a line in the sand, but everything says up, and then it seems to hold. Termination, there's your line in the sand. The buyers don't get back to it until 45 minutes later. But that's still the area where the sellers say we're going to put up a fight. Does that make sense? Everything says down. We're not expecting this to hold. But once the triggers roll, it has a better chance. Once the triggers roll, it has a better chance. So it's literally a line in the sand, right? This is where the sellers took over and gave the huge push. This is where, with everything up, the buyers tried to push up. And that's all. If you think about it, if you don't give it any more weight than that, it's a line in the sand when the rules are true. When this termination creates the reversal, the smalls are below, or the 8-3s are below the smalls, and price pulls back to that area. Let's see what this one looks like at 1924. On the S&P, 1924. So that's back a little bit. There's my circle. Termination, smalls are down. I love this stuff. This is fun stuff, guys. This is fun for me because this chart's exciting when you get good at it. There's your momentum trade right at the HVA, Cav. There's your momentum trade right at the HVA. A little confirmation from the good top with the momentum, with the triggers starting to roll, the smalls below, and that HVA line lines up right there where the market pushed down. That was the line in the sand. Look at all the freaking shenanigans in between. Isn't that awesome? It won't get you into the trade. Your rules will get you into the trade. It'll confirm the area where the rules say your trade should happen. Termination, these roll, this breaks, pulls back right to the large triggers that lines up with an HVA. After 3 divergences from the top, it's patience, yeah. It creates patience, right? Because it's easy to go short right here and get your ass kicked, and then go short again and get your butt kicked, and then go short again and get your butt kicked. But if you let it roll, it just creates this awesome little deal. And it's the difference. Let me go back to the picture. It's the difference between might and has. The area might hold, the area has held. And notice that there wasn't any of those HVA breakouts. There wasn't any of those high volume area lines until the sellers really set up. There was one to the upside, not going long there. So yeah, it's a great patience piece, man. It's an awesome patience piece. And then of course the challenge is, oh shit, look at this one. Termination, small triggers are down, large triggers have rolled. That's where the HVA line is right now after the fight. I don't know if they're going to get there or not. Whoops. But for me, what I can say is that if I'm going to take a shot at this one, I at least know where the sellers put a line in the sand. Does that make sense? But then you also have to take the large chart into account, right? This is a termination condition. Was this the one that's going to stop the market? Or is this the one that gives me my best chance of success? I've got to weigh out all the factors on these charts before I get married to a pink line on the small chart. This is awesome, guys. This is great chart reading. This is awesome discussion. And what's cool is you'll get to the point where all this stuff happens in a matter of seconds. The more time you spend with it, and Cav, I can't thank you enough, the more questions that you ask. Guys, I haven't taught market flow in a long, long time. I love teaching market flow, but you've got to be solid with your rules. You've got to know what you're looking for on your Renko charts before you ever go hunting on the market flow chart. Because I'll tell you right now, you will lose a bajillion trades if you try to trade just the market flow chart. It'll put you into positions and you're just going to get slaughtered and you're going to be so mad. But if you go back and you look at your large chart, you're like, oh, wow, never got my rules met. So I think this is the most important picture ever. And then John could add to this one when momentum rules are met as well. So guys, keep studying it. But the best thing to do is let the trades happen on the large chart, let the trades happen on the small chart, and then go look at the market flow chart and see what it said as you study it. And instead of trying to do it in the moment, Cav, go back and find good tops and bottoms, right? And then from the good tops and bottoms, where did it pull back to the area by the large triggers? And where that happened, what did your market flow chart look like, right? So we're going to start here from the termination and then embrace the momentum phase where the bars are outside of the small, and then we come down a level and the larger down and the mid band's down and the small triggers are odds favorable momentum, and then we look to the chart here and we say, man, that's my best look for a one down, one up. I'm going to get it. And I'm either going to sell it on the way up so I don't miss it, or the second this prints, I'm going to enter that trade and take some momentum. So I appreciate the lessons very much, guys, and I hope that it's helping. Whew. Good stuff. I like it when we go outside of the box, guys. I think this is how everybody gets better. So let's go through and let's read the market right now. Area never broke, area never broke, area never broke. Okay, so I don't have a clear path up even though it's green. My large triggers are down and my small triggers are down. And since my bars are below and away from the small triggers, I'm very much in a momentum phase. But I don't have a clear path to the downside, so we have to make a decision. Do I have enough information on this chart to say it's worth it to risk it? So let me show you how you would do that. If you decide that's your short, you have a sell limit just below. And what you're saying is, I'll give it a couple ticks, guys. If the HVA holds, great. If it blows past it, Not so much. I'm not going to do it. But you're not chasing because you see a down bar, right? You're not chasing. Notice which way your fast triggers are pointed now. So it's kind of a cool thing, and I don't know if it'll get there or not. I don't have any divergence on the pullback, and it's coming right back to that line in the sand, guys. But my large chart says that it's challenging. Hold on. Oh, I don't have any stops and targets. If it goes here, I don't want it. I got 1 point on it. And if it does goes, it's wonderful. All right, Joel. $50.50. Perfect entry. Brilliant stop. Just didn't work. I like everything about it, Joel. Termination, you've got momentum. The path isn't clear. The stop is perfect. Hell, do that all day long. All day long. And guys, look how they're dancing at the line in the sand. Isn't that cool? Momentum phase of the triggers. This is from 2004. Look where they went to. Right to the line. And there's your fight. Is it worth 50 bucks to think you caught the top? That's up to you guys. Roku says, nope, I'll wait for everything to agree. And Roku, in my own personal trading, I am inclined to agree because I don't have any triggers below these 1-to-1s, but I do have my large triggers below here. We'll see what happens. But that's essentially it. Area holds. You have to get that immediate momentum here. You have to get a pullback to a high volume area. And then you just pray. It either works or it doesn't. If it works, you feel like a genius. If it doesn't, well, you're out quick. It's kind of fun. But look how the market stalls right at these key areas. I think that's the best lesson. Is that they stop moving because everybody's fighting. And if you look at on the ask bid on NinjaTrader, the numbers are almost identical when there's a fight, right? It's like 50-50, 40-40, 60-60, and you can just see it. You can see how level they are, how there's such a fight at key areas. And this is the line where the sellers said, we may try, but the buyers said, dude, we have 1-to-1s. We have a mid band. We've already had a great bottom. We wanted to go up, sellers. Your smalls are above the large. We wanted to go up, sellers. I love it. I would say this one's going to lose if I had to guess. If it wins, I would be surprised because that's not my best luck. But that's how you use that pink line. There you go. Take me out. Cool. 50 bucks. And I'm with you, Roku. That's not my trade at all. It's the large triggers are still up, right? So why bother? Why hope? And that's kind of where we're at. Why wish? There's a termination that reversed the market. That termination that reversed the market is creating momentum. Cav, right off of the bottom, your fast triggers rolled, a white bar prints, one down, right to the HVA line of the white bar. We're anticipating that bar. That's your long trade. What does it look like on the small chart? Notice that you're on the correct side of the smalls on the large chart. Notice that it pulled right back to the area at the fast, strong triggers. That was your first run. There's your second momentum trade. Triggers break, pulls back to the area. What did it look like on the range chart? One down, one up. Oh, and they may have gotten you a little bit because they went one down, one up twice with all that momentum. And then it continued up. And now we're in trend trade range. Now we're wondering if the market is going to continue from an area inside of favorable large triggers. That's kind of the life cycle. But look at the look. We're not trading the I hope it goes, right? We're trading the it's gone, let's capitalize on the momentum. It's gone, let's capitalize on the momentum. And Kev, that's your bread and butter. That's the one that costs people a little more than they like to spend sometimes. Yeah, now we're just looking for a trend trade if it's going to set up. That's all it is. So you start off the bottom, look for the HVA, look for that white bar trade. There's momentum opportunities in the middle, and now we've reached a divergence high, and the triggers haven't broken, so we're in a holding pattern. Good stuff, guys. Thanks for taking me outside of the comfort zone today. Thank you for